Alright. We are back. We are back. Okay, hold on. You guys, give me a minute. Give me uno minute. And okay, it's a doozy today. It's a doozy today. Hold on, let me see. I need to put the chat up here. Give me 1 minute. Okay. Alright. So let's get to the meat and potato of things. I feel like, I'm going to be on. I don't know how long I'm going to be on here. It's getting pretty late already. Got my tax done. That was pretty doozy. It's ridiculous. But hey, at least I'm not owing anything, so that's good. Anyway. Hi Jay, what's up? I know I saw Moran's live. I wasn't able to finish the whole thing. I just finished his live up about a few minutes ago. It was pretty interesting, of course, like people bashing him and all that stuff. And of course, we know who Moran's is. We know who's real, who's fake, who whatever. We understand those things. But anyway, so let's get to it. Of course, I have my preacher over here, Jay, right? Biggest supporter. Okay, hold on, let me see. Let's get to the meat and potato of things. Of course, people would love to dance on the grave of GB, right? Like, oh, GB's going down. These people are mad. Nope, we're not mad. We are just trying to educate people on the right information here. Okay. So you know how people are like saying it's over and all that stuff now. This particular indicator shows you a different story, right? And I'm sure majority of people who knows what Gamestop is, they would know this indicator already. I've shown this indicator before, yesterday, and a few times before that too. But of course, the unbalanced volume, yes, there was a tick down, but it's not much of a change there. If you were to draw the horizontal line over here, right there, like it doesn't even exceed the selling pressure was not that much. It's possibly what Morantz was saying, that they were ping-ponging to each other. They were just selling among each other, right, in order to bring the price down. But the indicator right here that you're seeing right now on the screen, I hope you could read that. It says that the short interest increased to 24. I think I wrote the wrong, I meant to say 24, but 24%. I feel like they just changed that in a minute. It was a little bit higher a minute ago. But maybe they just gather more information. But it says 24%. So it used to be 22, right? So they add some more shorts. Now this is a possibly outdated information right here from Fintel, but it still stay at 22 there. So the fact that this indicator right here, it's called a short volume stamper. If you want to kind of check that out, it's probably more in real time short position here. So today, nothing new. It's what they've been doing for a long time. But anyway, so without that one, let's look at a different line right here. Of course, I'm still looking for that $9 price point right there. But hey, I'm adding. So this morning, I add a few more. But what I was able to do is, excuse me, I bought some T-bill a few days ago. So what I might do tomorrow is to sell off some of the T-bill that I have and possibly add more than I should. Just to say. I feel like I want more shares. I want more shares of this company. But anyway, we know what the company is doing. So today I'm just gonna, talk in the standpoint of the price action here. So forgive me for not sticking to the fundamental. Again, I've talked about the fundamental a lot, and so people need to know that. But today I'm just gonna focus on the price point right here. So Jay says everyone went live today. I know, I noticed that. I saw Dynamite. I saw what's the other one? Tetron, obviously, and then of course Marantz. And it seems like we're like on point, right? We're coordinating the live. But honestly, I was gonna live a little bit earlier, but I had to do my taxes and stuff, and then having to kind of arrive home a little bit later. So that's why only, and then it was just like doing some research. So it was not coordinated, but it just so happened to be like on point like that. It's kind of funny. Nothing to see here as usual every day, just another day of self-reported 71 shorted shares with volume on a company that is profitable and no long-term debt. Yes. Fundamentally, if you don't know the fundamental of Gamestop already, then I don't know what else to tell you, right? And of course, there's a lot of people who would like to tell you that this company is going under and all that stuff, and that's the prevailing majority of people out there. And of course, it takes some time for people to realize stuff like that, things like that. And so I'm not in the rush to tell everybody, it's hard for me to, formulate this sentence right here. To me, I'm not in the rush to do anything, right? And to me, I think that the company is doing its best to capture the maximum amount of opportunity out there. And precisely that's why they're not doing anything with that cash. And we all know why. We all know why they are sitting on that cash and having that cash position just to flex too, like, right? Or just to, it's like, hey, okay, go ahead if you want to drop it some more. We have the cash to buy it all up. And so again, I'm sure that's probably a flex, right, so to speak. It's a beacon of, hey, don't mess with me type thing, right? Again, I'm just speculating on what Ryan Cohen must be thinking at the moment. I feel like he would be doing this right here. Hold on, watch. He would be like having that evil grin in his face. It's like ha ha ha, and rubbing his palm together. It's like these people think that this price is like a scary price for him. Now, if you listen to the rest of that interview, the GMEDD guy got the interview with Ryan Cohen, and in that interview, he said he's always looking for opportunity. Opportunity to invest in the best company that he think that is in his circle of competence. So since he likes consumer businesses and stuff like that, this company is in his wheelhouse. So he's doing the best that he could do, that he's born here to do, right? And so, to have a CEO like that, I wouldn't mess with him in that sense. And I'm sure, the Wall Streets out there, the people that are, the haters out there, they're going to flip the script eventually when they see what Brian Cohen could do. I think they're just trying to wait. The people that are sitting on the sideline, on the fence right now, they're not going either way. They're not going to short it. They're not going to long it until a certain inflection point here. So all you have to do, just wait for that inflection point to happen. But before that happen, you better, think about how many shares you want to own when that happens. I'm not saying, again, like, I'm not going to do any price predictions or anything like that, because I don't know how high it's going to go or how low it's going to go in the short-term time frame. I could, draw this line, and this line might not mean anything, right? The only reason why I draw these lines because to kind of document the historical price action that it used to be before, and this is what traders look for. They, kind of, and the reason why I do this too, it's not because I'm trying to trade this thing. It is because of the algorithm out there. I'm sure algorithm, they are, primed for this type of thing. They're programmed to look for these levels. And they know, because they know that traders are looking at those levels the same way. And to try to scare some traders out, or entice them to buy into call options, put options, or whatever, so that they lose money in the end. Again, like I've talked about the call options before, and I don't know how well-versed people are, but I have quite a bit of experience in, call options in my own personal life. And to me, call option is very risky. If you don't know what you're doing, you might not even realize that you are not, in the money. Like, even though you're right on the direction, you have to be right so much more. The price action would have to go so high for you to even profit off of it. And so, leap options still risky, but at least you have that time horizon, right? That's why I had some, and it's not a large amount, so to speak. So, and even that call option at the moment, just on a perspective here. Let me see if I. Let's see. So that call option that I bought, I'm down 20% already because I bought call like a couple weeks ago. But that is a call option that is 2 years down the line, 2016. 2026, that's when it's gonna expire. And I'm comfortable holding that because I believe that in a year time, GME is not going to be at, this level. So the strike price that I picked was $13 a share. And I paid around $535 per contract for that one. So again, and currently if I want to sell it, it's like $428. And the reason why I did that is because, again, I believe in the company in the long term, right? Of course, it's called leveraging, right? But I'm not borrowing money to buy into that call option. I use my own money. And so this is why I could wait, for that to play out. Not to say that if there's a quick price action, let's say GME goes up to $20, I might sell one of the call and let one run wherever but again, like, this is what call option does. It's just making you feeling so antsy. And imagine if you have thousands of dollars worth of call option, and when GME doesn't do what it needs to do, people get mad, right? And this is most of the people that comes here and saying GME is trash, GME is this and that, right? Without knowing what's going on. Now, imagine if you use that $50,000 and buy into shares instead of call option, you would have been fine. At least you have the amount of shares that you need, right? And you could hold that share forever. The only way that portfolio is going to zero is if GME go bankrupt. And we all know that GME is not going to go bankrupt, right? Like, it makes no sense. It might fall down in price, sure. I mean, how far can they drop this? I don't know. All I know is that the company is doing better. And so will I be mad to, scoop some more? But yeah, so as of now, I have done my taxes already. So it's finalized. And I'm happy to say that I was able to max out my Roth IRA. So I'm very happy for that. Now in that Roth, obviously I'm gonna chip away at the GME. At the moment, I still have some Nvidia short, so I'm hoping that Nvidia is gonna kind of drop in price a little bit here. So, but if not, if I see GME at 10, I might just all in whatever the rest of it. We'll see though. I might have the ability to get at least 100 more shares. Maybe. Wish me luck. If it goes down to like this level right here, like $10, I'll be able to grab 100 right there. But again, I might just like 25 at a time just to be safe here. Just in case it goes down to $8, I might be able to get more. But those are my Roth IRA. That's my long-term bag. And so since I'm able to max that one, I'm going to be able to max this year as well. Hopefully, I would be able to kind of save that much. And so forevermore, I mean, as long as I could kind of max out my Roth IRA on the GME. And of course, this is very risky. Like, I'm not advocating anyone to do the same, as me. Because I have a lot of time horizon, right? I have 30 years to cash out of that. So this is why I do what I do. Because I believe in the company in the long term. Of course, what would change my mind? It's all up to Brian Cohen here. If Brian Cohen were to do some stupid shit with the money that he has as a CEO, of course, I'm going to reevaluate my decision on this company. But so far, he's doing great. So, sorry, I kind of rambled on there. Shorts are playing chicken with absolute fire, yeah. Won't be long, anytime now. Yeah, I mean, I'm not knocking at any time. I get everything covered. I have my call option, I have my trading account, so and then I have my T-bill, a whole bunch of T-bills that I haven't been pulling a trigger on selling yet, but I think I have like a couple more days for the dividends or something, but we'll see. But I might just sell the whole T-bill that I have. Pretty substantial. Substantial for me is probably like nothing for you guys. 940 or 960 is the very bottom. Okay, so it's around that time, right there. I mean, they could scare some of the people and then wick it down to 8. Could possibly happen, but hey, whatever. All right, I know. Hey Amber, thank you for joining. Still working, so we'll just listen. Okay, thank you. Careful, be more. I bought dip. What is it? I bought deep in the money leap, and it burns off after 2 years. Yeah, of course. Like, that's why I only do a couple contract here. I'm not going all in thousands of dollars here. I knew I did play that because of the earnings. I thought earnings was going to do pretty well, which is fine, and that's why I did a 2 years leap like this way. And I understand the risk, I really do, and that's why, I divided my portfolio the way that I do, is because I've got burned before just doing the day trading route. Not working very much and very stressful. It's not a life that anyone would want to have, unless you're all about that. Unless you're all about, the quick little, 2 or 3% scalp every day with thousands of dollars portfolio here. And unless you know how to read the chart very well, you might, and even the best of the best couldn't do it every single time, right? And so you gotta be like, you have to have luck on your side in order to do that. So yeah, I understand that. But this is why I'm trying to at least help people to be careful before you buy call or buy put. When you listen to all of these people going against GME because of the price, right, is because they are buying calls, buying put, hoping something is happening, right? Some big movement would happen. I've had people comment on my video saying that they're buying put and their put is printing and bragging about it. I highly doubt it, unless you buy like a leap put or something. But even that, you have to pick an in the money put, right, in order for you to benefit from this drop. Because the implied volatility is what you need to watch out for. Because the higher the implied volatility, that would make your option is high, like it's more expensive, right? So when it crash down, right? Usually that's option seller nightmare, because you won't be able to sell it at high. So even though you're right on the direction of the price, you might not be able to benefit from selling option because the IV is so low all of a sudden. So when you buy it, it was high, but when you're going to sell it to somebody, it's low. And so the price that you would have wanted to sell it for, it would not be profitable, and it really depends on what time frame you're picking the call option or put option or whatever. It's going to crush you. So that's why it's called IV crush. So if you want to learn that and kind of mitigate the risk of buying call, selling put, or whatever, then you need to understand those things first. It's not as simple as buying call if you think it's going up, buying put if you think it's going down. No. You got to understand everything, like and theta and beta and all that BS. It's stressful, very stressful. So, but if you play it in GME, it's an added risk as well, because it's so, like, it's such a skewed way of them pricing those call option, right? Or pricing, and who's pricing those? It's usually the market maker anyway. Again, they're not going to lose in this situation. So if you want to, option traders, you're risking more than you should be risking. It's much cheaper just to buy stocks if you believe in the company in the long term. Now, if you want to short it nakedly, as far as the short, like, just be careful. If you want to short it naked, all right, be my guest. But it's just a game of who could hold it for the longer. My opinion, I think that the long on this particular company is going to go very far. The winner is going to be the long game. As far as like holding shares, if you buy shares, you could hold it forever. If you buy call contract, you only have a certain amount of time in order for that to play out for you. So yeah, I'm just calling people to be cautious of those advice for you to buy call and trade it in, trade it out, and all that stuff. It's a risk in and of itself, and so if you don't understand, then don't play it, right? For the investor out there, congratulations, you get to see Gamestop at $10. I mean, this is ridiculous, but whatever. Yes, buying short term is hope. With Leap, poor man's cover call is your friend. I mean, that could be also. I mean, there's risk associated with that as well. Poor man's cover call, yes, unless you know, just make sure you know which strike price to sell that call to. I haven't used that strategy on GME, but I used that strategy on some other stock before. I don't remember which one, but I end up losing in the end. Now, I might have not done it correctly, looking back at it, but I haven't used that strategy, on GME yet. But as far as losing on that end, I forgot what I did. I probably picked the wrong call, covered call to. But anyway, it wasn't that much of a loss because it was just my learning experience. But yeah. Anyway, it wouldn't make sense if I talk about it. But yeah, I understand. Poor man's cover call can be risky. So make sure if you know how to do it well. Selling option is willing to buy stock, give you the availability to buy it or roll it. If it's in the money, right? Poor man is capped. Poor man covered call is capped. Wait, let me try to understand this one. Selling option is willing to buy, giving you the availability to buy it or roll it. You mean rolling over to the later date of? But then wouldn't you want to sell it? Selling call option. I don't think I understand that phrase right there. Sorry, my brain doesn't work right now. But anyway, so let's kind of off that topic. I know when I hear people, oh, my put is printing. That's like Grinch to me, right? But to me, I think it's one of those things where, are these real people or just bots, right? I'm kind of very cautious on that too, because of the comments that I have. It's kind of give me that impression though. That's why I think, who are these people? You didn't choose the strike price over the premium cost basis. You didn't, okay. Sorry, Keith, I'm trying to understand you, but I can't. Either my brain broke just now or something's happening. Correct. Okay. Alright, so, okay. What was I planning to talk about here? Fundamental. We know what fundamental is like. Of course, Bitcoin's going berserk again. I think like commodities gonna go run amok at the moment because of course they're expecting rate cuts or rate hikes or whatever. The decision hasn't been made yet, but the projection is that the oil price gonna spike up again, so that's gonna ensue inflation. And so if the Fed is not gonna raise rate, they're not the inflation is going to exceed the rate even higher, unless the Fed wants to surprise the market and raise the rate to 6%, which I don't know what's gonna happen, so I'm not gonna even guess. But for now, of course, like bitcoins and all the cryptos are going berserk again. Selling, call. See, I don't know this term right here. Give you the ability to buy it or roll it. Either you buy it at the strike price or roll it to buy more shares with the premium. Oh, okay. Now I understand it. Yeah. You could do anything with the premium. Got it. I probably don't explain it correctly in chart. No, you get it. I got it. Yes. Okay, so let's take a look at this real quick. Of course, again, like it's nothing new here. I feel like, I'm repeating myself, and I feel like this. But the short interest is right there. Shorted shares. Like $1.6 million, 1.6 million shares being shorted today, and we only traded in like 2.3 million. So half of that, or well, not even half, 70% of the trading volume comes out as a shorted share. This is a reported shorted share, by the way. So it could be more. Who knows? I don't know, like, is that crime? I don't understand that either. I don't know why the price comes down, but hey, I'm happy that the price comes down. So let's do it. If they want me to own Jimmy at $10, I'll oblige that. If they want me to own it at $9, sure. All right, I'll accumulate more. Let that sink in. Okay. I want to check to see if there's any institution buy-in. Okay, so the last time I checked on this institution, breakdown over here, was 7 shorted only. Right now it's down to 6. So, hey, we're scaring some shorts out here, right? So it used to be 7 short only, 25 long and shorts, and 498 of them are long only. So most of the institutions out there, if you look at that breakdown, they are long on this company, on the share of Gamestop. Only 6 of them are short only. So we're not battling, all of these people over here. It's just a handful of people who are short to the core, right? And they can't get out of it unless they, do something like buying shares. You gotta buy share on the open market, and good luck try to go to Ryan Cohen and do a backdoor dealing. Like he's not working with private equity, so good luck. Okay. Okay, so that's good. I feel like that's a good insider activity. Is there anybody selling out of this company so far? I don't see it. Wait, hold on one second. Yeah. unsell plan. So I haven't seen anyone selling. Okay, that's good. Okay, hold on, let me see. Okay, selling cash secure put. Oh, okay, cash secure put. Sorry. That terminology. That is volume, yes. Volume is per trade but the block can be 1 shares or 10,000 share per volume. Okay, so this is the volume. This is what you're talking about. Volume. Yeah. But again, like, I don't really understand, this particular chart right here. All I know is that it says total shorted volume right there, and then total volume reported, right? And then they have off exchange here, and then there's off exchange exempt, right? so much, and then if you look at the volume, this is the amount of shares being exchanged to wherever, right? And it seems like anytime they do a shorted volume, there's like millions and millions and millions and gazillions of them every day, every single day. Like, there's no fail of that at all. Okay, so let's look at the option chain here. So this weekend, if you understand what a max pain is, right, it's going to be at $12 right there. All of these options, all of these going to be out of money, right? And this is what's happening in this grand scheme of things. There are people who are betting against or for the company, and most of them will never see this premium, right? This premium is just a hope that perhaps it's going to run that day. So if it doesn't run that week or that day or that hour, these people are going to be losing money. And this is why they're coming out here and says to you, GV is trash, because they can't make money on call option, right? So understand that when people come out here and be angry about the stock price, they don't understand what's happening in the company itself. The company is doing fine. These people are betting up and down. That's on them, right? And that's good for the investor, because if they bet the price down, right, you're going to get the opportunity to buy it at a low price. So long as you're not participating in the buying and selling, you think that you're going to time it just right. Okay, you might be able to once, twice, maybe 3 times. But can you do it like 10 times in a row? Of course not. I don't think so. But hey, that's me speculating. So currently $12 would be the max pain. They have to bring it up to $12 soon. Again, that's not an end all be all there. So please don't take that too hard. It's just what it says here. They could close at a loss, right? Because they don't want to have to pay the gamma rams over here, right? So 12 is right here. They want anything below 12, because if it's at 12, the $12 might be in the money, and they could exercise technically if the call option holder have the ability to exercise at $12, right? So that's that. Let's look at the next one, next week. Next week it's 14. So let me see. You see all this right here? Perhaps this is where the price drop comes in, because most of this put option was in the money. And so some of them perhaps were selling the shares in order to make the profit on the in the money put option right there. And so that's why you see the price drop. But if you look at the max pain for next week, it's $14. So market maker would have to bring it up to 14 in order for them to make an equilibrium. So this Friday is 12 max pain, and next Friday is 14. So what is the next one? Next one is back to 12.50. But this could change at moment's notice, like, because it's kind of longer date call option. You might want to kind of be careful there. Just because it's 12.5 right now or 12.50 right now, it doesn't mean that it's going to be 12.50 forever. It could fluctuate based on how many people are betting, against the company or for the company. It seems like it's skewed towards call option. People want this company to, expect the company to go up in price. But again, if the price doesn't go up, substantially, these people are going to lose money this week right there. Lots of them. Lots. Exactly. Volume doesn't state amount of shares. Oh, okay. Within in per volume could be millions of share. Okay, I see. That's probably why I don't understand it. But yeah, I appreciate that, Keith. Appreciate you. But yeah, I mean, as far as like the price action, it's pretty interesting to me to see what's happening day to day, because I do monitor it day to day because it's just for fun, right? To see how low can I get Gamestop at, right? So that, later on I'll be like, oh yeah, I got Gamestop at $10. That would be fun. Like in 5 years from now, you'd be like, oh yeah. We saw it coming a mile away. But yeah, this is, if you invest in this company for a long term, you see the value in it already. It's just for the newcomers out there that I'm worried about, because again, they don't know the backstory of what's happening into this company. So, I feel sorry for them if they listen to the mainstream media out there, and it seems like the majority are listening in for that news, and they tend to steer people away from GME, right? And this is why they do it. Character assassinating GME for no reason. Character assassinating, Brian Cohen for whatever reason, right? Just to drive the price down. But let me end this stream. I know I'm just like preaching to the choir here. That just note this, okay? Only a handful of institutions out there that are short. And the majority of them are either long or short. Now these 25 right here, they are hedging. So, they could flip short, long at any moment in time, right? Because they don't care about the direction. They just care about the volatility, the price actions, and all that stuff, so that they could kind of skim off of the fluctuation. So that's why they are neither long nor short. But these people, again, if the company's doing well, they're going to switch more long than shorts just to offset, I guess hedge. That's what they do. They hedge. Right? That's why they have more, if the company's doing well, they would have more longs position than short position. But the short is just to offset the price drop momentarily, and but that's what would skew the result towards the long. For the shorts only one, of course they're gonna get imploded. Depends on when, depends on how long we are able to hold onto the shares that we own. But I feel like, based on the on volume balance, I feel like nobody really sold out. Not many at all. Because, I mean, if you look at this one right here, price spike, volume spikes up. But when the price comes down, there's no volume spike down, right? To offset that. Price is lower, but the on balance volume higher. What gives, right? What gives? I'm here for you, Keith. Oh, thank you, Keith. Appreciate that. But yeah, you seem very knowledgeable about the whole GameStop thing. How long have you been in GameStop, if you don't mind me asking? But yeah, so one of the things that I was looking at too is, I don't know if you saw the early one earlier, is the indicator right here. That is a pretty steep short ratio right there. For 24%. That's higher than than it was ever reported. So, but that could just be temporarily, until they resolve these trades right here. I don't know. Again, it could be before it explode. I feel like it's going to have to be the catalyst from the company itself. Whether we go, I have a speculation about the company, what Ryan Cohen is going to do. Of course, it's only my speculation here. But it would be cool if he would kind of like the board. Now, he doesn't have to come here and talk, but if he were to post something on the sheets, what is it, 10K or 10Q or whatever, that we are going to be increasing earmark. You know how we have like $100 million? Just my dream here. $100 million marked as a shareholder buyback or something like that, like as a share buyback. How about increase that amount to $1 billion or even $500 million instead of just 100 million? Just that announcement alone, I bet it's gonna send chill, down somebody's spine. But I think they don't even have to buy the stock back. Just that announcement alone will do something, I think. And if not, hey, it's at least we have $500 million earmarked for a stock buyback in the future. I don't necessarily want him to buy the stock back because that doesn't do anything. I would much rather him just hold that cash, for whatever is needed for the future. And even if we have dividends, I think dividend would do much more damage, but it's just a temporary damage, right? We want this to be a long kind of it's like an infinity pool type thing, in my opinion, right? Because this company is not going to go anywhere, and if they have that cash on hand like that, most people don't realize that Apple actually have more marketable security in terms of percentage than GameStop does. And so, nobody's up in arms about that. It's like, why are you parking billions and billions of dollars in treasury bond? Let's see, if you look at Apple. Right there, $32 billion in treasury bond, and nobody bat an eye, right? It's like, why are they not using that money to grow the company? Okay, well, why are the Apple people don't use the money to grow the company? This is not a growth company, but Be careful with that. Why not? I know. I'm trying to avoid speculating on GME and all that stuff, but it's fun. It's fun for me to kind of like guessing what leadership's gonna do. Of course, leadership's not gonna listen to anyone's suggestion, let alone mine. But it's just a fun thing to have to think about. Ryan Cohen is doing what he's doing best. So he's good at this. He's good at, the consumer businesses, and he's been successful before. So I have no doubt that he has every intention to build this company from the ground up, and make it better, scalable, or scale it the right way. Slowly but surely, you want a good foundation here. So thank you, Bimor. All helpful information. Got around. Oh, thank you, Emma. Appreciate you. But yeah, I mean, oh, you said for a while. Okay, for a while, that's good. I'm gonna assume before the run, before the squeeze. Okay. No dividend, more cash infused to a higher premium to future growth of the company. Yeah, I agree with that too. I don't want them to even buy any company at the moment, right? Unless I want them to buy something, but not at the moment. But if they were to choose to buy something, I hope it's like in the private sector, right? That it's not publicly traded, so that they're not going to be kind of like able to attack the price of the company or whatever. So I don't know if that's even like, what company are they gonna buying into, like? And to me, he's always searching for companies or opportunity to expand his portfolio, personal portfolio here. So I think, again, whether it's no dividends or cash, buying back the stock and all that stuff, I think it's just a temporary move. I would much rather them not doing anything with the cash right now. So, but as far as like dividend paying right here, like we used to pay dividends before the corona, right there, March 24th. That's the last time. And when we did, it was like around 10 cents a share. So can we go back to that? Perhaps, yeah. But I think it would be premature to do dividends at the moment, because we want to build that cash. At least the net income has to increase substantially. But I have no doubt that he could do that, honestly. Like maybe next 2 quarters we would be able to see. My hope is that the first quarter is going to pose a positive. Like whatever positive it is, it's going to be good. Because if you were to account for this one right here, it would pose like maybe close to $55 million trailing 12. $55 million trailing 12. Now, if we lose 20 million, like Wall Street expected, we still would be ahead. We would still be around 30 to 25, 25 to 30 million dollars trailing 12, right? Depends if it's a value over extended company and can cut the meat on that would impress me. wait, if it's a valued overextended company, okay, and can cut the meat on the bone, on that would impress me. Yeah, I think that's why he went after BBY initially. Yeah, I think BBY, it was a play in which he was trying to steer leadership. I don't think he saw, he realized what's happening in BBY until he got in there as a board of director, right? Well, he wasn't a board of director, but he was appointing the board of director in there. And, you know, being in there, I bet, taught him a whole bunch of stuff that is happening in there. And I think that's beneficial for moving forward for GameStop as well, because he gained that knowledge from the private equity standpoint, right? And I think this is why, if you notice, this is why he changed something about the 401k. Have you noticed? Because of the private equity, I bet. And so, yeah, it's like, it makes him wiser to at least not trusting anyone. And it's kind of like, I don't know. Let me not go there. It's too much, too deep, I feel like. But BBBY was like a story that I know kind of a little bit more, kind of on that end. Because just following it, of course, like I bought into it initially too. Didn't sell on time, obviously. I kind of believe a little bit on the narrative that, oh, he might be still in it type thing, right? And of course, like finding out very quickly, it was like a play that it was useful for the quote-unquote establishment to use against him, because this is why they bring it all the time. It's like, he was failing at BBBY, tinker with BBBY, pump and dump and all that stuff. So it's a useful narrative for them to use. That's why they play it that way. You know, and the media knows it. The media, you know, didn't seem to give the right information here. Hi Sharon, thank you for joining. I'm on my way out, so I'm so sorry. But I've been here for close to an hour. Yeah, just want to put my 2 cents in. I know like everybody was live today. Moran's was live. Tetron was live. Dynamite was live, so that was funny. He saw the value of Bye Bye Baby. Yeah, he wrote it on the letter. But the entire buyout didn't make sense to take it on. Yes, that's why he only bought like less than 10% initially. But the board of director, they did a share buyback to lure him in to be an insider. And once he was considered to be an insider, he did write another letter, I think, saying that, hey, I will be appointing 2 board of director on my behalf. As far as like I'm already a chairman of GameStop, so I'm not going to be, you know, sitting on another one. So that's what I remember that happened. Let's see. Yeah, I mean, like if the BBY leadership wanted that company to survive, they would have taken, you know, Ryan Cohen advice and do those things. And if they follow his strategy, it would have been still around, right? But the leadership didn't want that. They wanted to go bankrupt, right? And it's demonstrated, you know, on their behalf, on their action. Of course, I can't prove that, but, you know, based on the action of the board of director, the CEO, and thereafter, you could tell why he decided to sell. And he explained it in that interview too. It's like, hey, I'm on a standstill agreement. I'm not like it's rare that the company would just use the cash to buy back the share aggressively and would operate at a negative type thing, right? So he knew what happened. That's why he's like, hey, I'm out. I'm not gonna play with fire type thing, right? And why would he lose his money because of that, right? It's all good. Thank you, Sharon. Amber, Sharon. Hey, Jay. He got to see the book and bailed. Yeah. And that's what smart investors are like, you know? And people are like, oh, he's just pump and dumping. It's like, he uses money to buy into a share of a company. Just so happened to be 10%, yes, but it's still his own money. And so, you know, that's why, like, it's so blatant to me that the media would paint this guy to be some villain on Bed Bath & Beyond. And still is. Like, again, they conflating. There's an attempt there to make this guy feel like a villain. When they were trying to promote Chewy, I could see the tone was so much different then. And that's how I know it's just like bull crap, right? When they say stuff like that. It's like when they try to promote Chewy to the public so that the public would buy it from them, they bring Ryan Cohen in, they bring Larry Chain in, you know, to speak well about Chewy at the time. Even though we all know that Chewy was not profitable, they still pump it to the public, right? But now, when they're on the other side of the trade, Ryan Cohen is a failure. Ryan Cohen doesn't know what he's doing. Ryan Cohen is a meme king. Ryan Cohen is whatever, right? Or GME is not a good play. GME is this, GME is that. But we all know why. You know, it's all biasy towards them. And yeah. And the financial media should not be like that. It should be neutral. Just report the facts and let people decide. But now we have the media that is just there to give you some sort of opinion on some sort of company for you to fall for that, to fall victim to buy at a high valuation, so that they could sell it to you, you know. And that's the name of the game, is to get you to buy at a high and sell at a low, right? Like now in GME, they want you to sell. Like, oh, why would you hold on to this? Sell now. You might not be able to get your money back. Type thing. All right, guys. Sorry, I'm long-winded today, but yeah. So hopefully, you know, you understand what's going on. I know people would love you to think that GME is done, but today's price action, it was just dumb shorting again, like adding more percentage, volume, or whatever you want to call it. High short interest is still there. Nobody's selling based on the OBV, on balance volume here. So what else is new, right? We'll see about what happened tomorrow. Just look out for that $9 right there. Hey, whatever. So good luck to you. Appreciate all of you. I will see you tomorrow. Maybe.